They don't have control of the other people's decision making. They have control over their money. When you're trading, you could flip a coin. If it's heads, you're going to buy. Tails, you're going to sell short. If it's a Monday, you're going to only buy the morning session. If it's a Tuesday, you're only going to buy the afternoon session. And you put these filters in. And you never risk more than 0.5%. At the end of the year, you could be profitable. Figure that out. Figure that out. You're holding for the daily range, by the way. That's the other part of it. It's the same mechanism that's being seen in poker. It's the same mechanism that's done in anything, that if you give yourself enough time for the circumstance to pan out, whereas in this case, the daily range, creating the higher high and close on the high when you're bullish, or lower low and close on the low when you're bearish, if you put yourself in those days appropriately and just hold on to it, don't jam your stop loss up, try to strangle the trade, you are in a position to capture the lion's portion of the day. And you'll capitalize what that algorithm is going to do for that daily candlestick when it books the low and the high of the day. I'm telling you the times that it's going to create those instances. The low of the day is in the first 60 minutes for stock indices. The high is formed going into 2:50 to 4 p.m. all Eastern time, okay? New York local time. So if you're bullish, you can try to nail down the low, and you'll probably lose trying to do that because you're going to try to capture the very low. And over time, you'll realize that, okay, what happens? Just wait for it to actually be there, and then trade it on the next discount array. What you'll be doing is you're going to be buying the low risk entry of the market maker buy model. Yeah, so let smart money have that smart money reversal. I'll be down there, but when you see that next fair value gap or institutional order flow entry drill or inversion fair value gap to trade off of, or order block, bullish one, that could be your entry mechanism for the low risk entry. And you ride it all the way back up to the initial high of the day, and then you anticipate an explosion where price goes up higher because they're going to want to leave that Judas swing area as fast as they can. And it's going to, a lot of ground will be made there. And people will chase it all in that big buy sign and balance, sell sign efficient that'll form then. And that's where the lunch macro will retrace back down inside that and stop those individuals out. And they'll accumulate more longs that they'll ride through the PM session of the day, and they'll get out at the high of the day forming between 2:50 and 4 p.m. Eastern time. Folks, that is your real candle range theory. That's the real Power 3. That's the real ICT. Okay, that's the algorithm. That's what the algorithm fucking does. That's what it's coded to do. Anything other than